Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, we're bracing for a good start. In a few minutes from now, we'll get the pre-opening rates as well. But before we do that, let's get in some derivative strategies. Sneha Seth, derivatives research analyst at Angel One, joins us on the show. Hi, Sneha. Good morning. Run us through your strategies this morning.
Good morning, Nigel. If we see Nifty, since last 10 days, we haven't seen any much movement. In fact, Nifty is hovering in the range of 16,800 on the lower side, 16,200 to 50 on the higher side. If you look at the FI's data, wherein the long-short ratio was around 10, has now improved and it is around 17 if we see the yesterday's sessions data. So overall data remains very oversold, like the market is oversold, and until and unless we are sustaining above 16,800 on the closing basis, I would say we should avoid short positions, and any further positive trigger and any up move above 17,250 will boost the overall sentiments. In case of banking index, the support is around 39,000, and on the higher side 40,000 remains the hurdle.
Your trades, Sneha?
If we talk about stock picks, I'm liking Sun Pharma. If we see this counter, it has rebounded from the 200-day simple moving average on the daily chart. It closed 1% up yesterday with decent volumes even. If you look at the options data, we have seen unwinding in 990 to 1020 call options. And also we have seen the writing in 960 to 980 put options, which is a positive indication. So I would suggest buying Sun Pharma with a strict stop loss of 963 and a target of 1024. Apart from this, I'm liking ITC. The counter has seen a strong run in the later half of January and initial part of the Feb series, and now has formed a strong base around 370 to 75 zone. So I would suggest buying ITC with a strict stop loss of 376, and a target will be around 394.5.
Okay, thanks a lot for that. Sneha, have a good day. That's Angel One with their views on the market. It's F&O expiry for the month tomorrow as well, so it assumes importance. But let's get down to individual stocks now. Paytm is the momentumizer on our list. Abhishek is here to give us more details on that. Abhishek, go ahead.
Well, Sonia, Paytm, as you mentioned, is the momentumizer stock of the day. Stock has outperformed Nifty in last 1 week as well as last 1 month. So in last 1 week, Paytm stock price is up 11% versus Nifty being flat. Monthly basis, Paytm has gained by 4% while Nifty is down 1.8%. The volume data, Monday volume was about 312 crores. Delivery volume was about 20.3%. In terms of the pricing, the stock is CMP is about 621.4, which is above the 20 DMA but below the 200 DMA. Morgan Stanley has written on Paytm they have an eco-weight rating with a target price of 695 per share. They say that for Paytm Payments Bank, the new guidelines could lead to additional revenues and some higher wallet loading charges. Back to you.
All right, Abhishek, thanks very much for that. Good speaking with you and appreciate you joining in with that. That's Paytm in focus. Now, Ankur Rudra is joining us. He's Executive Director, Technology and Telecom Research at JP Morgan. Ankur, good to have you back on the program. Thank you very much. It's been a while, Prashant, this side. So we'll talk about both telecom and IT services, but telecom first. So your thoughts on the announcement that Jio is launching an unlimited data and voice fiber plan for new customers from the 30th of March. Is this fresh, new aggression? How would you read into this, and what are the implications for, the one name in the telecom, the standalone telecom space, Bharti, which everyone has hopes pinned on? Go on.
Hi, Prashant. Thank you for having us. So I think, we've definitely seen continued signs of aggression in the market for telecom this year. We've seen this, with the new capex cycle for the industry with 5G. We saw some, plans and counter plans a couple of weeks ago on the postpaid side, and it seems like we'll probably see similar level of aggression on the fiber side as well, just in time when expectation of viewership is likely to rise because of IPL in the coming month.
So what about the stocks itself? I know you don't want to comment on individual stocks in the telecom space, but do you reckon that with the kind of aggression that you spoke about, is there a lot more upside? Because you are underweight on names like Bharti Airtel. So what seems to be the concern here?
So I think across the industry, what we are definitely witnessing this year is because of three factors. One, because of the 5G capex cycle. Two, because of incremental competition. As a result of partly the capex cycle, as a result of focusing on trying to acquire more customers. And three, delays in any kind of tariff increases. The ROIC for the industry will definitely get impacted. So we are quite cautious on the telecom space in India across the board. But the main reason being, increase in capex, which probably will not see a return anytime soon, and a likely deflation in the premium end of the market. Because we think one of the players is very keen on changing its strategy and focusing on premium customers. We're seeing aggression, the example that we just discussed a few moments ago. And we think that will only increase. I think another source of aggression, which is probably to an extent underappreciated, is the unmetered 5G plans. These are effectively free 5G plans, so above a certain ARPU, people are getting 5G consumption as much as they want. So it significantly deflates data pricing in this environment.
All right. Hi, Ankur. Talking about tariff hikes, when will the prepaid tariff hike come about? Will it be in 2023? Or do you expect it to come post the general election, say sometime in the middle of 2024? Your estimates.
Sure, thank you. So I think what we've said is we do not expect any tariff increases in the near term. Till there are elections, we wouldn't expect any tariff increases. We think what we also built in our numbers is the earliest possible tariff increase is probably the end of CY24. We've historically seen tariff increases taking place at the end of calendar years. So most likely it will happen at the end of CY24, given there are elections in the coming period.
Okay, so that's telecom. Let's move on to IT services, Ankur. You still stay underweight the space, but the latest news flow there has been all the banking worries, right? The collapse of SVB, you put out a note post that. We are seeing more worries about, and actually people are wondering whether they need to worry about more banks, especially in Europe, etc. now. What are the implications for spending from that space, BFSI space, because it's a very large contributor for IT services revenues?
Absolutely. I think, BFSI, as you know, is about 40% of industry's revenues. It is the biggest spender on technology across all enterprises all over the world. So it's a very key part of revenues for the industry. And we think, given the a few banking turmoil examples we've seen on both sides of the Atlantic, we think the first way this will potentially play out will there be probably a slowdown in any kind of spending on existing budgets. We've already actually heard some of this before the recent crisis began, that revenue conversion had begun to slow down, spending, or deal ramp-ups were beginning to slow down. We think that will only continue, which will probably impact the growth rate for the next 1 or 2 quarters. The second thing which also definitely happens a lot in such periods is there is uncertainty and spending goes into a bit of a freeze. As a result, incremental deal signings, sales cycles take a lot longer and deals take a lot longer to close, which will probably impact growth more like 3 to 4 quarters, maybe even a year out. So those are the two direct factors we see which will impact the industry. The second factor is, let's say the third factor is any kind of second order implication of the banking industry getting a lot more cautious, which might impact related sectors. And tech spending might get impacted in those related sectors of the economy. The commercial real estate sector, for example, is coming into the news right now, but there'll be many other sectors which might also get impacted.
So there's also this narrative, right, that chat GPT and other forms of, say, AI programming could sort of could blow up and then maybe, affect pricing as well until these tech companies reorient themselves. What's the impact that this could have on the Indian IT sector, you think?
No, thank you for the question. I think it's very interesting. This is a year where we're seeing a lot of very significant changes. The banking crisis is one. Chat GPT is another very fundamental factor, which I think could impact the industry for multiple years and not just this year. So what we are seeing is really, we're seeing generative AI come and create a very significant source of disruption. There are both positives and negatives from here. The positives is there is a significant increase in productivity of existing talent. It widens the pool of available talent for these companies very significantly. This also drives probably much better quality of management. However, the challenges are whenever we've seen a significant increase in productivity over the last 10 years or so, it has resulted in pricing pressure. The IT services industry is a B2B industry which is extremely fragmented, where bargaining power is largely with the clients, and any kind of productivity increases typically don't stay with the vendors. And we see as a result of this, there will be a significant amount of potential pricing pressure going forward, which could deflate the growth for the industry over the next 2 to 3 years, and definitely pricing as well. So it probably could drive an element of margin and pricing concern going forward.
Okay. Ankur, I know you keep an eye on global internet company valuations. You may not cover Indian listed stocks like Paytm, etc. directly. I don't know if you do, but are there, looking at what's happening globally to internet company valuations, etc., the new age theme here in India, does it have room to breathe higher in terms of valuations, or, I mean, there is more compression ahead, just in terms of P multiples?
Sure. I think what's interesting about the India internet space, and thank you for the question, we covered all of TMT in India. And what we're seeing about Indian internet is definitely this is a year of what we call redemption. These are companies which probably got listed in 2021 at very different macro scenario where interest rates were very different. And the focus of all the companies were a lot different. They were all focusing on growth and expanding adjacencies. I think what's completely changed now is companies have focused significantly to profitability over growth. And there's a lot more focus on going to core areas, getting out of unrelated adjacencies, and getting the unit economics and metrics work. I think to that extent, many of the leading companies, including the company you mentioned, are showing that focus on growth, focus on profitability. The main challenge for many of these companies this year is that how do they maintain growth, a respectable amount of growth, while profit targets are also maintained. And to that extent, I think the one evolution we'll probably see in this industry is we move from revenue multiples or GMV multiples to profit-based multiples. So yeah, P for this industry is unheard of because very few actually make a profit. And hence, moving to the point where there is adjusted EBITDA profits and PE profits, I think that will be an evolution for the industry.
All right, we'll leave it at that. Ankur, thanks a lot for joining in. Very helpful to talk both about the telecom and the IT space. But let's get back to the markets now. Looks like it's going to be a decent opening, but very range-bound. Sudarshan and Mitesh are back with us. Sudarshan, what's the big call at 9:10?
Well, Dabur is a buying opportunity. It's a positional buy with a stop under 534.
All right, Mitesh, what about you?
Well, you go with a sell on GNFC and a mild bounce back, say around 5035. Sell with a stop at 519 for a target of 575.
Okay, that's on GNFC. Thanks for that. Another stock in focus this morning would be Hero MotoCorp. That's because there's a cautious note coming in from Kotak Institutional Equities on Hero MotoCorp. In fact, they say that there's no respite. There's still a big slowdown underway, and they maintain their reduce on the stock. They've cut the target price to 2,400 from 2,600 earlier. Reasons for weakness, there are four main reasons that they talk about. There's an increase in the cost of ownership, there's higher inflation, weak rural demand, and concerns around El Nino. So these are the four big reasons why there still could be caution on the sector. The other big reason is Honda has entered the 100cc segment in a big way, the entry-level motorcycle segment, with the launch of their 100cc bike, and they've come out with an aggressive pricing which could perhaps lead to more market share loss for Hero MotoCorp. Remember, Hero is the #1 player in the 100cc segment currently. Now, the market share has already been declining. Way back in FY16, Hero had a 53% market share overall in the domestic motorcycle segment, and now that has declined to about 45.8%. So a consistent decline seen in various parts of India, southern India, Maharashtra and Bihar, is something which is making Kotak a bit cautious.
Okay, all right, Sonia, thanks a lot for that. Well, let's hop across to Sonal. She's stopping by to tell us about the gas pricing. Remember, we are waiting for the revised prices from April itself. Sonal?
Yes, we are. Come 1st April, there will be a change in gas prices. Usually, it's done as a formula, and that's the APM gas prices, which are changed every 6 months. Now, a Mint report is suggesting that Cabinet is set to adopt the gas panel panel report this week, which is the Kirit Parikh recommendations that they had made back in November. They will be meeting on Wednesday, and 1st April is the last date when they can actually make a decision whether they want to actually take up these recommendations or just not. But the idea is that yes, the government will go ahead and adopt these recommendations. What were they? Well, the panel recommended a range of $4 to $6.50 per MMBTU, where $4 was the floor price and $6.50 per MMBTU was the ceiling price if the gas prices had to be set. Now, 1st Jan 2027 was proposed as the complete liberalization of APM gas pricing. Difficult fields should see liberalization by 1st Jan 2026. This is all for the older fields. New fields, they will continue to enjoy pricing freedom as per the market dynamics as well. So if this is approved, it will of course be negative for ONGC Oil India, because now there's a cap in terms of gas pricing, positive for the likes of MGL, IGL and Gujarat Gas. In fact, we did speak to these gas users. MGL did tell us that Kirit Parikh committee outcome should be in place by 1st April. IGL said that if these recommendations are taken into account, there will be a fall in prices to the tune of $1 per MMBTU, which is a big relief for all these gas users. Both of them said that yes, only once these recommendations come out and gas prices are set, will they take a decision whether they want to cut prices or hike prices. So all depends on this outcome, and that is something we'll be waiting by for.
That's an interesting space, and MGL and IGL are clear beneficiaries. Sonal, thanks very much for that. And this is this should happen. There is no reason why it should not happen. We've had companies with us talking to us as well. It's just that we need to find out when is the cabinet meeting and when it's going to get approved. It so happened that things have gotten approved on the last day, all the way in the evening. So it's, but let's just hope. I mean, it gets done. Usually the meetings on Wednesday, so maybe...
As long as it's not on Thursday on a holiday, that's fine. The meeting can happen whenever, not on a market holiday. Well, no, jokes apart, I think we have 30 seconds left for the markets to open. ICICI Bank is interesting. So, it's going to be one of the first big banks to announce its earnings, the Q4 earnings that comes out on the 22nd of April. So, ahead of that, the stock is up almost about 1%. Keep an eye out on that. And so many smaller companies, right? Kalyan Jewellers, Warburg Pincus will be selling stake. All Cargo, they are acquiring Gati Kinsesu for 406 crores. So a lot of individual stocks in focus. But let's look at the overall markets now. The first tick is in the green, so 40 points higher on the Nifty. The mid-cap index is the one that's really, not doing that great. So just a tad bit, I think, just a tad bit in the green on the mid-cap index. So do keep an eye out on that. The Nifty now is up almost about 36 or 40 odd points, 42 points to be precise. So a start in the green. What's leading on the way up is a couple of these commodity names. Hindalco is up almost 2%. ICICI Bank, as I said, is up about 1%. Maruti Suzuki is in the green. Reliance, Infosys, L&T, a couple of other heavyweights, Titan, M&M, Tata Steel are all in the green at the moment. Ultratech Cement is also in the green, up about 0.6%, batting for the bulls this morning. Apollo Hospitals and Wipro are a couple of other names that are holding up on the green side. On the downside, you have names like Sun Pharma. In fact, a lot of these, consumption companies, so whether it's Tata Consumer, whether it's Asian Paints, something like an Eicher Motor trading in the red. Bharti is a tad bit in the red, nothing alarming. Hero MotoCorp also just a tad bit soft this morning. BPCL is down about 1%. ONGC, Adani Ports and NTPC, a couple of other names that are in the red. So now you'd have to say it's a very quiet opening, really. No major move either way. Kalyan Jewellers is the one that's down almost about 10%. About little less than 3% equity has changed hands in Kalyan Jewellers. As we were telling you earlier, Warburg Pincus is looking to sell stake. So maybe that's what's played out right now, down almost about 9%. But Nigel will take it away on the other stocks and focus on the broader markets. Otherwise, for the market, not a bad opening, holding on to 17,000 now.
Well, that's right, Sonia. And a few stocks are moving around. Paytm, that's a stock in focus. The KYC wallet customers can make payments on every UPI QR code and online merchant. So that stock is up close to around 1.5%. You have Kalyan Jewellers, Warburg Pincus, well, they sold close to around 2.5%. The problem is they still hold a large stake out there, so that's what's playing on it. That stock is down 10%. PNC, they bagged a new hybrid annuity highway project worth around 820 crores. So that stock, I think, had opened up well in the green. You have Dilip Bilkon, the L1 bidder for NHAI project for hybrid annuity project in Andhra Pradesh. That was worth close to around 780 crores odd. So PNC and plus one stock. Let's get the stocks that we're talking about up for you on the screen. PNC as well as Dilip Bilkon, both of them are reacting favorably. And Anand Rajan pre-open, well, that stock was up close to around 3%. And the volumes are quite high as well. just keep an eye out on that one as well. So we have a green start to kickstart trade. The mid-cap index is already in the red. So that's the problem pocket. Keep an eye out on the Nifty bank. It's close to 250 points away from the 200 EMA mark. You'll get incrementally positive if the Nifty bank can move up by 250 points from current reckoning and hold about those levels. Yesterday, we almost went to the 200 EMA, but immediately it went anywhere close to that. It was welcomed with a lot of selling pressure. So that's the problem pocket. Prashant, what else?
All right, 40 points now. So 17,025 is where we find ourselves at. This is open like what we saw yesterday. Slow, and then yesterday, of course, things picked up very sharply mid-afternoon before correcting. A few other names, Adani Green, Adani Transmission, both are down 5%, if you can have these intradays up. Now, only mentioning things with large volumes. Kalyan, of course, we, I think, spent time on. But Green and Transmission down 5 each. There is Bandhan Bank, which is down 2%. It should come up 193. Adani Total is down about 5%, 913, 911. Adani Power is down about 3% as well. So Adani Wilmar is down about 2.5%, 3% as well. So that entire group is under some pressure this morning. BPCL is down 1.5%. Stocks at about 339. We have Emphasis, which is down about 1.33% or so. So this is the losers list, stuff with volumes, basically. Paytm is up 2%. It's the biggest volume-led gainer. Is 635. Abhishek has been telling us the reasons why Paytm should be in focus. Hindalco is up 2%, 398 actually on Hindalco. And you got Page Industries, which is up 1.5% as well. I can spot PNC Infra with a 5% spot. KPIT Tech and Policy Bazaar are some of the others which are there in that 1.5-2% range at this point in time. Market breadth is positive by about 150 odd stocks. It was deeply negative from the word go earlier yesterday, which is not the case right now. 35 points on the index. Our market master of the day is Sanjeev Prasad, Managing Director and Co-Head at Kotak Institutional Equity. Sanjeev, good to have you with us here. Thank you very much for your time. Want to start by asking you whether with the correction that we've seen, valuations are back in fair zone, at least at an aggregate index level, Nifty level.
Yeah, you're right. Valuations are about 18 times on a 12 months forward basis. So yeah, valuations are looking somewhat more reasonable, I would say. Having said that, you still have risk of earnings downgrades going forward, particularly in the discretionary space, given the fact that the slowdown is for real. And from whatever we are picking up, it looks like it could extend from the 2 to 4 quarters. So, yes, you have some downward risk also to earnings. Having said that, probably valuations probably matter less at this point in time. What matters more is, how the sentiment is panning out. There's just so much of confusion out there in terms of, the news flow. On the one side, you have a lot of financial instability in the world. On the other hand, you still have high inflation, so the central banks are struggling to balance the two. And then you have all sorts of, potential negative news in India in terms of, possibly a not so great monsoon this time around. So there's just too much of, news out there, which will probably act as a damper on the market for the time being, despite somewhat reasonable valuations, I would say.
All right. Well, I wanted your thoughts, Sanjeev, on how to approach IT now. Slew of resignations, of course, a lot of concerns about a slowdown in growth and reduction in client spends, an impending US recession. All of that is not boding well. In fact, this month itself, names like Infy, Wipro, etc. are down about 6 to 8%. Do you see more pressure?
Well, I don't think the IT stocks will do much in the current environment. You have still a lot of uncertainty with respect to the demand environment. First, we have to wait and see how quickly the US financial system stabilizes, given the fact that BFSI is a very large segment for the IT companies. You have a lot of issues in Europe also at the same time. So any IT company which has exposure to high BFSI and Europe, clearly, there are overhang as far as growth is concerned. So as of now, for most of the IT companies, we're building in about, let's say high single-digit top line growth. I suspect you could possibly see 2 to 3%, percentage point big shift off from there, given a possibly slower demand environment. Most of the banks would more focused on, managing the balance sheet rather than, giving out orders at this point in time. So decision making, etc., will be fairly slow. So at least the first half of the next financial year, FY24, looks like a very, very slow period as far as the IT sector is concerned. And on top of that, if you look at the valuation, in most cases, there are somewhat still higher than pre-COVID levels. So I suspect you still need to see some more derating as far as the stocks are concerned, multiples are concerned, and you will also probably see holding downgrades. So yeah, so IT doesn't look good at this point in time.
Hi, Sanjeev. Good morning. What about metals? That index has popped up in trade, at least today. But there are still global headwinds that lie ahead. However, the ferrous pricing or steel pricing has been quite strong. And as a brokerage house, I think you're an upgraded Tata Steel. Your view on the metal space and between ferrous and non-ferrous, where's the preference lie?
So as of now, we are somewhat more inclined towards ferrous compared to non-ferrous, given the overall supply-demand balance. But having said that, the upgrade on Tata Steel is more on a slightly medium-term basis. At this point in time, there's no real catalyst for the stock to, move up. The call is more on the fact that, you're getting to the end of the expansion program as far as Kalyan project is concerned. So you will start seeing volume, pick up going forward. And hopefully the profitability has bottomed out. And, even if it does not go much from there, the story is more driven by, volume growth as far as Tata Steel is concerned. So not that much, I would say, driven by a great view on the steel cycle, more driven by volume growth, specifically in the case of Tata Steel.
Sanjeev, is the way to go about trying to look for opportunities, look for kind of bombed out sectors? We had S. Narain of ICICI Pru with us, a few days ago. I mean, he was talking about sectors like pharma, which are deeply undervalued. At some point, things will turn. Is that the broad approach, Sanjeev, in a market like this?
Well, the problem is there's still too much confusion here. The only sector where valuations are very attractive, I would say, the financial sector. But there, the challenge still remains. You have a lot of global uncertainty. So until that clears, people will still continue to, have a negative view on Indian banks. So having said that, Indian banks have got nothing to do with whatever problems we are seeing in the US. They fundamentally are in very, very strong shape. They don't have the, the asset liability issues which many of the regional US banks are facing. But till that overhang, goes away, I suspect, Indian banks will also struggle despite, somewhat deep value for many of the banks. I mean, most of the PSU banks are now down to, again, 0.7, 0.8 times, one if forward price to book. Even the, better quality private banks like Axis Bank, they're all down to less than 2 times price to book now. So clearly there is value out here. Hopefully, once the global panic starts subsiding as far as US banks are concerned, and some of the, I don't think they're very relevant issues, but somehow people are very worried about NIM compression, etc., which is a very well-known fact. So I don't know why that should be such a big concern as far as Indian banks are concerned. So once some of these issues get digested, hopefully you start seeing rating in the banks. Beyond that, to be honest with you, we are struggling as far as, value is concerned. I mean, pharma, possibly, you just have too much, news flow uncertainty over there. I mean, Cipla looked trade value at 1100 and suddenly you had so much bad news out there, right?
What are your thoughts on autos? There are multiple headwinds which are coming together now. Whether it's, from the 1st of April, you have new emission norm costs which are going to go up. There's the El Nino effect as well. The rural market has not recovered just yet. And now I think in 1 year's time, even the subsidy, as per the FAME subsidies which were given on electric vehicles, that could be taken out as well. So what do you do with a space like this? Do you, be cautious here, churn out? What's the approach?
So anyway, we had a very cautious view on most of the auto names, barring the CV and the tractor space. Even the tractor space, we'll have to be a bit careful. Even the long-term story is fine. Valuations of M&M look fairly attractive. The problem is if you actually have an El Nino, then there is no, story over here, at least for that particular year. So yeah, so we have been pretty negative on the two-wheeler space, the entire four-wheeler space, so continue to maintain that stance. I think volume numbers are too high as far as the street is concerned. You will see a slew of earning downgrades over there. And in that context, valuations are still very, very expensive, I would think. You need to see a deeper correction in most of the auto names. I mean, they have not done much anyway, but I still think valuations are on the higher side over there.
Sounding cautious on autos then. Sanjeev, we chatted pre-budget. And at that point in time, given the fact that insurance companies were underperforming, valuations were fairly reasonable, well, it was looking fairly constructive out there. What's your view now in budget 2023? Well, there was a rude shock for them out there. But from here on, what do you think about these stocks? Some of them have corrected a good deal even from those levels.
I would agree. The valuations are starting to look really attractive for them. The impact of whatever changes you saw in the budget, it's there. It's about, let's say, 5 to 11, 12% as far as premiums are concerned for most of the life insurance companies. But hopefully that's it. What we don't know is, whether you start seeing more changes as we go forward in terms of, government starting to reduce the 5 lakh cap, to, let's say, to even lower price policies. So that, will create more uncertainty with respect to the entire space going forward. I mean, the valuations look reasonably attractive. It's a very good long-term, story over here, given the insurance penetration is still very, very low. So all that stuff is positive. Just that, the taxation uncertainty which has come with respect to the budget, I don't know how much that extends into the future also.
So just I had one follow-up on the comment you made about autos. You said that, you'll wait perhaps for valuations to get better. Some of these stocks, prospects are still very strong, right? M&M, for example, I mean, it's been doing exceptionally well in the SUV space, and the stock has fallen 10% in March. Is this a good time to be buying?
Well, M&M is the only one which looks okay. That's what I said, tractor space and CVs were the ones where we were positive. Valuations are corrected for M&M for sure. It's still at about, if I remember correctly, 1100, about 12, 13 times on a 12-month forward basis for the pure auto space. So not too bad as far as valuations are concerned, I would say. The issue isn't how much discount you want to give for the value of the subs over there, sub and associate companies. That's always a matter of debate. But yeah, it looks okay. But the overhang is still the monsoons, right? If you have monsoons get disrupted, volumes will struggle, I would assume. And in that case, I don't think the stock is going to perform. See, we'll get more clarity on this issue by April, May, whether it's actually having an El Nino or we sort of managed to scrape by for one more year. Having said that, weather patterns have become fairly erratic. If you look at even last year, even though you had normal monsoons on paper, the spatial and temporal distribution both were actually very, very normal. Monsoon started, late, which affected the sowing season, and then late, which affected the harvesting season. And you had, actually deficient rainfall in the food-producing areas. You had excess rainfall in the non-food producing areas. So some of the challenges, I suspect, will be there in the future, just given the challenges of global warming, climate change, etc.
By the way, market breadth has now flipped to 1,000 stocks lower and 950 higher. I mean, the difference was in any case about 150 stocks, and that has just now kind of moved its the lines are crisscrossing. The Adani Group stocks I highlighted earlier as well. Green is down 5. You've got Power down 4, Wilmar down 3, Transmission down 5, and Total Gas down about 5% as well. So that is a pack is lower. AU Bank is a new one into the mix. BPCL is down a little bit. Oro Pharma is down 1.6. Biocon is down about 2.5. So lots of these names starting to come into the losing list, and this is stuff with volumes. Market's right there, just about 30 odd points or so. So around where it opened. Sanjeev, has your view or your team's view changed with regards to any of these new age companies? Have they come to any decent levels? We just had the JP Morgan IT analyst with us who said this is a year of redemption for these new age companies. The focus is on profitability, etc. But what's the view at Kotak?
No, we like most of them now, given the big correction which has happened. Whether it is, I think we have positive views on all of them, like Policybazaar, Zomato, all the new age companies that we cover. We have buy or add ratings on all of them now. Yeah, so, valuations started to look a lot more reasonable, I would say, after the price correction. And as you rightly pointed out, given the focus on profitability, hopefully we are moving in the right direction over there. The fact that you already have a fair amount of industry consolidation, at least in the food delivery space, unlikely anybody else is coming in. Hopefully the path to profitability there is a lot more shorter. In the other ones, Nykaa is anyway profitable. BB Fintech, if you exclude the offline business, which is a new focus area, the tech piece is actually reasonably profitable. Yeah, so we're generally liking the space at this point in time, I would say.
Okay, all right, we leave it at that. Sanjeev, great speaking with you. Thanks a lot for joining in and, speaking to CNBC TV18. Let's move on now. As you know, there were certain amendments made in the finance bill a couple of days ago, and the country has now removed the long-term tax benefits for debt mutual funds. So India will tax investments in debt mutual funds as short-term capital gains. And as we know, mutual funds having less than 35% AUM in domestic equity will lose their indexation benefit. Now, what does this mean for the HNI and the ultra HNI category, and what happens with investments henceforth? Is this a really big setback, and how do they navigate in terms of investments? Rahul Jain, the president and head at Nuvama Wealth, and Nishant Agarwal, senior managing partner and head investment advisory at ASK Private Wealth, join us now to tell us what this means for the HNI and the ultra HNI category. Gentlemen, morning to both of you. Rahul, let me start with you first. If you can just, put on the table a broad understanding of what this means going forward, especially for a large chunk of the ultra HNI segment.
So what will happen, Sonia, is that earlier in the debt mutual fund side, used to get an indexation benefit, and your holding above 3 years used to get taxed at 20%. So if you look at a 7-year target maturity fund, generally they're in range of 7 to 10 years. The effective your tax rate used to come between 12 to 10.5 to 11%. That was the effective tax rate. But now with the amendment, this tax rate will become 30%. So effectively, your 18% of earnings will get more taxed, and that is why the yields on your debt mutual funds, etc., will go up by that amount. In terms of the yields will go down by that amount. So that is what has happened with the amendments coming in on the finance bill.
Okay. Gentlemen, hi, good morning. What are we seeing now on the ground, Rahul and Nishant? Are we seeing, Nishant, if I can come to you, are we seeing lots of allocation into debt, just a few days left, right, before the changes kick in? Are we seeing anything, large action?
Yes, absolutely. I think a good part which has been done in this budget is to grandfather. Two things is to grandfather existing investments for this financial year. So no investor needs to kind of rush and get out of the debt mutual funds to avail indexation benefit. What it also brings to the table is to invest debt money before 31st of March. Any investment which is made in this financial year, till the time it is held, will continue to avail indexation benefit and the advantages which indexation and long-term follows. So we have seen a deluge of investors who were looking to invest in debt fund in the next 1, 2, 3 months are preponing their investment before 31st of March so that they can take this preferential tax regime by investing in the next 3-4 days.
Can you put any numbers to it? You called it a deluge, Nishant, but how large is it?
Tough from our side, but I would say on an average, if the clients were sitting on cash, 30 to 40% of money which was to go in debt in next 6 months is getting preponed and getting invested right now. This is also kind of supported by the fact that a lot of investors were invested in a category of investments called MLDs, or structured products, which also got negatively impacted in the budget. And many of those have been liquidated before 31st March. Unlike debt mutual fund, where current investments were grandfathered and do not get impacted, MLDs, there was a kind of a tax advantage which is only available if you redeem them before or transfer them before 31st of March. So both the things put together, investors who could sell their MLDs to gain tax advantage were sitting on liquidity. And if you make investment in debt mutual fund before 31st, you will get advantage in future, coincided together, and both these funds are now moving towards debt mutual funds.
Rahul, same kind of feedback from you as well in terms of what clients are doing?
Yeah. So there are two things which are happening, Prashant. One is that people are using this opportunity to increase the allocation on debt and go into debt mutual funds. Apart from that, I think the whole insurance change which has also happened in the finance bill, where the guaranteed plans earlier used to have no ticket size limit, now it is 5 lakh. There are a lot of money is going there as well, because that provides you still tax-free returns, and also you can lock in your future investments also on tax-free returns point of view. So a lot of allocation is going there as well. So both the investment platforms are getting a lot of client interest, and a lot of money is moving there right now. But we keep advising clients that since this change is happening, but you have to look at asset allocation liquidity, so that to ensure that you're just not running after because the efficiency of tax is going away. Because we strongly believe that asset allocation is first, and that then later tax efficiency comes into play.
Got it, got it. So this is, of course, a time-bound thing. The money is rushing in right now before 31st March. But overall, if you look at asset allocation, Nishant, you're nodding, aggressively to that. So what is the asset allocation strategy now? Do you recommend at a time when equities has taken a bit of a backseat? Is there more money that you're recommending one puts into gold, into international funds, debt funds? What's the asset allocation strategy for the rest of the year?
So currently we are maintaining a neutral asset allocation between equity, debt and global. I don't think, like Rahul mentioned, we will be looking at changes in tax to alter asset allocation and move more towards debt or equity. That has to be aligned with the goals of the investors. And with the current juncture where market is, we don't see under or overvaluation in equity to move on one side or lean on one side. So we maintain neutral allocation based on the goals. Yeah.
Are you seeing a lot of money as well move into insurance products, similar to what Rahul was mentioning a while back? And can you quantify it for us? What kind of money are you looking at there?
On the insurance product, a little bit, yes, because there is another change in tax which happened in the budget, which said tax benefit of insurance beyond 5 lakhs of premium will not be available from policies taken from next year onwards. So these are little more longer term decisions. So investors who were on the fence, probably looking at deciding on insurance in the next couple of months, might be better off by deciding it now for large ticket sizes beyond 5 lakhs. And that is the main reason which we are seeing. Otherwise, just because of tax changes, making a new decision and investing, probably not as much. And mind you, the investment change primarily impacts insurance plans which were linked with insurance and investments together, whether it was endowment or whether it was ULIP plans, because normal term plan will definitely fall below 5 lakhs of annual premium and will continue to retain their benefit. So it's only when investments and insurance are merged together, those plans will lose the benefit.
Nishant, I'm assuming that the majority of the audience which is watching the program here, and I'm assuming you're, younger people, they say, well, you'll end up making more on equity in any case, right? So all this tax change on debt side, etc., well, it's okay. Asset allocation is important, I think, as both of you mentioned. We're not seeing any, at least in the next couple of days and today, we're not seeing any rotation out of equities, rebalancing into debt, that kind of action. Nishant?
No, not at all at our end. As you very rightly said, over long periods of time on a nominal basis, equity would have given almost double the return of what debt has given. Equity, even if you look at index, Nifty, Sensex are 13 to 14%, debt is between 6 to 8%. So long-term benefits are right, but there is a reason why debt still exists in the portfolio. There are goals which people have to meet with debt. There is volatility which people don't want to take of equity. And hence there is a kind of an asset allocation decision which they broadly decide for the portfolio. That is not tinkering, neither are we advising to change that just because tax is changed.
Rahul, any other changes, interesting sort of products which people are reaching out for after these changes have been made?
So we will see, I would say, a renewed interest again going for bank deposits because that is what I feel next year will start happening, because it brings a lot of convenience, and since now that differentiation is reduced, I think it becomes an easy port of call for everyone. People might also go on buying direct bonds in cities, and I'm sure that they will assess the credit risk, but that is also one thing which will happen. I feel that ultra HNIs and HNIs will also move towards PMSs and AIFs, which can provide specialized strategies, higher yields for clients who are willing to take higher risk, will go into such strategies as well. So that is one thing which will happen for sure. So effectively, what we see is that the old money will keep sticking on debt mutual fund, because as we said that it will have some benefit there. But the new money flow in will start moving into these directions as well, where bank deposits, direct buying bonds of government bonds, NCDs of corporates, and also specialized strategies into AIF and PMSs will also happen.
Okay, wow. There has come a time when bank deposits have gotten more attractive than all other risky assets, right? Imagine the HNI and ultra HNI category taking their money and putting it into bank deposits.
I mean,
the very same place where our parents put all their money in, right? And we told them, no, you know what? Bank deposits is not the place to be. Equity is the place to be. But I guess everything comes back to security and safety at the end of the day.
Oh, absolutely. I mean, asset allocation, I think there is, you start there and then you move down to, individual asset classes, etc. It's just that, what constitutes and what makes sense in one particular category within the asset allocation, that perhaps has moved out a little bit, as both Nishant and Rahul pointed out. Debt mutual funds for further investments post the 31st of March now becoming very unattractive, at par with FTs. Well, time for a quick break now. Up next, Dheeraj Kumar Jain of India Pesticides will join in to talk about their new product getting TEQ certification in European Union. A little later after that, we'll also have our segment, Charting Trends. Rahul Sharma of JM Financial Services will help us decode the charts and the technical trends in markets and several other markets as well. Stay tuned. We are back.